You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back. If you're saying, man, I just heard those guys, it's because you're listening in our live right now. You did just hear us. We're coming on to the second part of our Options Bootcamp doubleheader for this week, because next week when this show airs, I will be traveling out there. Dan will be doing God knows what down there in the options mecca of Frankfurt. Luckily for you folks, we don't leave you hanging. You're going to get your Options Bootcamp come hell or high water out there. My name, of course, Mark Longo from the TAG, optionsinsider.com, as well as from the network upon which all of you folks are sucking down the bandwidth. That especially implies to good old Options Bootcamp. You folks love yourselves a little bit of the old OBC. Hey, we love that you love it. We're here to deliver it for you in whatever way, shape, or form you require. So if you want to go all the way back to episode 1 from 2013, which I know for a fact quite a few of you are doing. We had to remaster episode 1. Might have to remaster all those episodes. It's so much demand for them. But we love it. Keep it up. However you're getting the show, whatever platform you're getting it on. If you like what you hear, feel free to share it with somebody. A rating, a star, a comment, a review. All that stuff does help new people discover the content. Just like this week's 5-star review actually coming not from a traditional content platform for us, but our stuff does go out also. I said it goes out everywhere under the sun, including LinkedIn. I believe this is LinkedIn, and this comes from Mark Anderson. He says he's a 0DTE index option expert, hedge fund founder, and managing partner at a hedge fund. So there you go. He just says, great podcast. Keep up the good work. Love seeing 0DTE continue to grow in coverage. Yeah, we'll talk about it here, Mark, and everyone else who's intrigued by it, because it is one of the topics du jour in the world of options out there. But thank you for taking the time to rate and review us or leave a nice comment. Again, on any platform at the end of the day, all of that in aggregate does help new people continue to discover the content. And if you want to discover more content beyond OBC, a lot of you have questions. Our Pro is designed to tackle a lot of those questions specifically with our awesome Pro Q&A sessions. Just had a great double Pro Q&A, nay, a debate between Mr. Dr. Vix and Carly Garner out there. Has been on our Futures Options show quite a bit, debating things like nat gas and ladder spreads and volatility type trading and VIX and other things. It was an awesome debate. Driven by you folks. You folks wanted it. We made it happen. You guys can find it for yourselves. Theoptionsinsider.com/pro. If you're listening to this next week, it will be too late for the March Pro Trading Crate, but get your name in the hat for the April Pro Trading Crate and every crate that comes thereafter. Theoptionsinsider.com/pro, the place to go to learn more. As we go around the horn and welcome on my compatriot, my partner in all things options crime, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show. And what do you have to say for our friends, even in the hedge fund space, who love the show, sir?
Oh, yeah. Hey, Mark, good to hear from you here. We were just, I guess, interacting online, I think, within the last week or something. This person, and he still rated the show highly. Like, wow, that's surprising. Once they interact with Dan, usually those ratings just plummet, right? Yeah. Thanks for the love, folks. Much appreciated. We love over here.
And speaking of your love, listeners, to see what you got in store for us, because you folks take the reins this episode. It's an all-mail call palooza. So here we go.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, let's get to it with our questions of the week. First, let's go out first to the one we asked you right now. It's last week. By the time you hear this, it will have been 2 weeks ago. We asked you folks a very important one for this show in particular, which is a question we've never asked you before, which seems strange. Took us 17 years to get to it, but what is your primary reason for trading options? Gave you 3 choices and the infamous other: income, premium harvesting, protection or hedging, or speculation. 54.2% at the end of the day, just over half coming in on the income or premium harvesting side. 39.6% swinging for the fences, a little bit of speculation. Only 6.3%, Dan, coming in on the hedging side. Does that breakdown surprise you? Over half coming for the income and then 40% for speculation and not much love for protection, sir?
No, not at all, man. Because you know what? I think if you're listening to a show like this, you're probably more likely to be a trader than just somebody trying to figure out, how to buy insurance. So I think that fits our demographic just pretty darn nicely.
Got a bunch of degenerate premium sellers in our audience, Dan. What are we going to do? What are we going to do with these degenerates? No, we love you all out there, no matter how you sling your options. Our questions of the week this week, which by the time you hear this, if you're not listening live on the Pro, will be next week. I know it's confusing, all these time jumps, listeners. We have a twofer for you this week, which is kind of fun, Dan. First off, this one was kind of inspired by our debate we got into on the option block on Monday. We were talking about Apple and Tesla, both trading right around $170 at the time. They both moved a little bit since then. But we said right now, gun to your head, they're both trading $170. Which one would you rather buy? So Dan, I put it to you, Apple or Tesla, both at $170. Which one would you rather have in your account? And then B, which way do you think our audience is going?
Oh, geez, Louise. I mean, this is a tough one.
I think this is not like for a week. This is for more of a long-term type of buy, right?
Yeah, exactly. Well, I mean, for me, I'm going to go with Apple. And for our listeners, I'm going to go with Apple.
There you go. Double Apple. And Dan, once again, you have your finger on the pulse of the audience. It's been pretty contentious the whole time, but now Apple's starting to pull away with it. 58.2% coming for Apple, 41.8% for Tesla. If you're listening live or listening on the network next week, when we post this, it'll be too late to vote in this, but you should be going over to Ad Options anyway every day because there's great content there, links to all of our shows, and of course, fun questions of the week just like this. Our actual question of the week, the one we started off the week with, Dan, is another fun one. Q1 drawing to a close right now. Quite simply, which market segment are you the most excited about for the rest of the year? And we use excited because that can cover a broad range of reasons why you're interested in it. We gave you 3 choices, and again, the infamous other: equities, crypto, or volatility. Dan, which of those 3 is floating your boat right now? And more importantly, which one do you think is floating the boat of our audience?
Oh, I mean, I've got to say, I've got to say equities because, let's pull up charts of all of them, right? First of all, selling volatility, which we talked about on the last show, that's good and steady until it's not. But for 5 months, the S&P 500 just grinded higher and higher with steady to lowish volatility. Crypto's made some pretty good moves too, but that one's a little bit more dicey. That's one headline away from, a little mini implosion.
So 100% crypto is what you're saying for the audience and for you as well. You're 100% all in on Doge and a little sheep.
Oh yeah. Anything that has a picture of a cute dog on it.
Yeah, there's a dog on it. Dan's all in. Pets.com, he was huge on that one. until he found out it was a sock puppet dog, and then he bailed. Luckily for him, right before it all imploded. Actually, Dan, right now, Vol taking it with our audience, 36%. It's a tight race between Vol number 1 and Crypto number 2, 32%. Only 24% for less than a quarter going for equities right now. So maybe they're a little bit spooked by these valuation levels in the equities right now, Dan, because they're not looking there. And then 8% for other right now. A lot of you writing in, including people like our pro member here, Mr. Age of Del Aquarius, saying you voted other. He said, I voted other because I'm watching interest rates first and foremost. A lot of you writing in for rates. We didn't put rates specifically. We went other because we put rates in the past and hasn't gotten a lot of love. Go figure. When we put other, a lot of people write in for rates. That's just how it works. But listeners, do you agree, disagree with that? Get over there at options. Make your voice heard right now. Right now, Vol taking it. Maybe a lot of you looking at Vol being fairly anemic right now, all things considered, and maybe taking some swings to the upside, looking for a little bit of Vol pop. Maybe you're playing the trade we had going on. We were joking on Vol views and options oddities, a little bit of VIX puts to the downside heading into the weekend. Either way, a lot of you folks playing in Vol right now, Dan. Now, speaking of Dan, it is time for the Market Taker question of the week. What you got for us?
So the question of the week is what kind, and this is pretty funny. Well, I had this plan to talk about before the last thing. It was what kind of strategies are working in this market, but I want to do some subsets here.
So let's talk all Shiba for the rest of the episode.
Exactly. And these are interesting subsets of what we just talked about, especially considering it combines a few of them. So when we have an equity market that's just going up, 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 and implied volatility, while it's lower than it was a few months ago, still arguably overpriced when compared to historical volatility, this has been, and it looks like still is, one of those markets where just selling puts is king. Because when you sell puts, you get positive delta, you get positive theta, you get negative vega, and all of those things end up having an edge to it. So, like, that's one of the things that's key. That can be, I mean, that's generally I consider to be a trading strategy, but it can be an investor strategy as well. I generally consider that an investor strategy, but it can be a trader strategy as well. But for traders who are more conservative, things like put credit spreads, if you already own the stock, just simply selling covered calls and doing your adjustments that we've talked about on the show and such before. So, yeah, I mean, basically any option strategy that's positive delta and short options, that's the kind of stuff that's working right now.
All right, let's see what's working out there in your questions. We got a few inspired by our Diagonals episode a few weeks ago, Dan. Let's go to this one first from J Dark, JDARC. Maybe it's Joan Dark. Maybe she's writing in, Dan, to ask about options here on the show. Either way, she, whoever is writing in to say, I'm writing in to follow up on your diagonal spread episode. Can I safely sum up the difference by saying if you think the stock is going to stay put, then you do the calendar, which again, listeners usually traditionally buy the longer term option, usually at the money, sell the nearer dated one, again, usually at the money for a traditional calendar. And he says, versus if you think it's going to move, then you do the diagonal, which is again, pushing the longer term leg a little bit away from the at the money, maybe to the upside in the call example or to the downside in the put example. Mr. Dan, do you think that's a pretty fair characterization of when to do a diagonal versus a calendar?
Yeah, I mean, basically, well, it ends up being kind of interesting. I mean, basically, the big difference is you get that positive delta when you're doing a diagonal, and geez, I mean, we did a show on this just the other week, and I don't want to open up a whole new can of worms. We could basically do a whole nother show on the difference between doing the diagonal poor man's covered call versus just simply a directional calendar. To me, I like it when I know that I'm going to be rolling that long option over and over and over and over, like keeping that long option and then rolling the short option over and over and over again while still holding on to that long in the money option. So yeah, I guess that's my 2 cents.
You're talking more about like the long-term kind of stock substitution use case where you're writing near data stuff against it. That use case, I could see that too. That's kind of a different type of calendar, but a calendar nonetheless out there as well. We kind of refer to that. I know our buddy Mr. Overby likes to call that the fig leaf because you're only partially covered. He said one of his readers of his book, he said, came up with that title. I've always thought that was kind of funny. But yeah, for the most part, Joan d'Arc, that's what I'm going to call you. The most part, your supposition is pretty much spot on, especially if you're looking at it just from a purely underlying movement perspective. You think things are going to, I guess, stay put for a little bit. Maybe you want to get a cheaper bite of the apple to the longer term side, to the upside or to the downside, then a calendar will work. If you think it's going to maybe move a little bit more, or the other reason you'd really want to do these, and we kind of touched on this on the episode a few weeks ago as well, but it's a little bit more advanced use case, not really appropriate for a lot of our listeners out there, is you're looking at something like, let's say, VIX, where the term structure can be all over the place with the futures. And now you could have a situation where one of the expiration cycles is extremely bid, the other is extremely offered from an overall vol perspective out there. Now you can use a calendar spread or a diagonal to take advantage of that as well. And that's another use case. Again, we didn't get into that much, but outside of what you point out, which kind of brass tacks is a decent way to look at it, I think. And then beyond that, you can get into some other things of trying to take advantage of discrepancies in the term structure and hoping maybe you could capitalize from those spreads there as well. Again, we didn't get into that too much on the show. So for short answer to your question, I would say, yeah, it's a pretty decent way to look at them, especially if you're just starting out with these spreads. All right, let's keep going. We're going back to diagonals again, Dan. This comes from NDLP. He says, hello from the options mecca of Kentucky. Uh-oh, Dan, you've got competition. No longer is Frankfurt the options mecca. Now he says it's Kentucky. Do you take umbrage at that, sir?
Well, maybe he's from Frankfort, Kentucky.
You're right. That? Oh, that would be a double slap in the face for you. Then it would be the true options mecca, Frankfort, Kentucky. F Lexington. Nobody cares about Lexington, right? It's all about Frankfort. I can't remember anyone else writing in. I'm sure they have written in from Kentucky. No one has proclaimed it like this in their message. So you get bonus points, NDLP, for loving yourselves a little bit of your Kentucky bluegrass roots. He says, can you spare a minute for your southern neighbor to talk about put calendars and diagonals? I noticed that most of your examples utilize calls, and I understand that most people will use them that way. But your episode got me thinking about using calendars for cheaper, longer-term protection or to spec on some downside in a few names on my watch list. Is that a use case that you guys agree with, or do you think time spreads are best for call traders? You know what, NDLP? The reason most of our examples tend to operate around calls is most people just tend to be able to more easily and intuitively understand upside movement in particular underlyings. That's just the way it is. Even when you do basic options education and you try to explain buying a call and you say, okay, the underlying is going to go up. And now instead of doing that, you can buy this call and it gives you money if the stock goes up and it loses value if the stock goes down. Most people can wrap their heads around that. You start talking about a put and now it makes money when the stock goes down and loses it. You lose a lot of people already. So that's really the reason why most of our examples tend to focus on calls and strategies that gear around the upside, just because that's easier for people to understand at the end of the day. But never let that give you the impression that this is not a use case that you can also apply to puts and to the downside, because it very much is. Dan, what are your thoughts here from NDLP? He wants to know if he can do put calendars and put diagonals, sir. Is that allowed in the options handbook?
Yes, it is allowed. And there's something, this is another one where we could probably do a whole show on this as well, but it's kind of making me think about what really the big difference is between calendars and diagonals. I guess this kind of goes back to Joan d'Arc's question as well. But let's start with calendars. So I was going to say don't confuse call and put calendars, but I guess what I really mean to say is do confuse call and put calendars because synthetically, like they're really the same thing. Like a put calendar is no different at all than a call calendar, except for one minor nuance in how you trade it, which I'll talk about in a second. But if you think about it, if you buy a call and you want to turn that into a synthetic put, all you do is you short 100 shares against that long stock. And if you sell a call and you want to turn it into a synthetic short put, all you do is buy 100 shares against that short call. And so if you did a time spread and then made both of those calls into synthetic puts, you would basically be shorting 100 shares and buying 100 shares, which is a wash. So just by mathematical logic, a call calendar is a put calendar synthetically. Now, the only difference that's a kind of a nuance that doesn't even have to be a difference is how people typically trade them. Typically you would do these calendars out of the money. So if you're going to use a lower strike than the current stock price, you do a put calendar, or higher strike call calendar. If you're right at the money, it literally doesn't matter which one you do. So I kind of want to throw that out there. But then as far as put calendars, yeah, I mean, just think of the poor man's covered call just upside down. I mean, if you think that a stock is going to trend lower and lower over time, but steadily, I mean, yeah, man, just buy an in the money longer term put and sell a succession of shorter term out of the money lower strike puts and just roll week after week as the stock goes lower and lower, roll to lower strikes. And as I think about it, I don't think I've ever really thought about this before, but as I think about it, there might actually be a hidden benefit to that, because as the stock goes lower, the implied volatility of the shorter term options is going to go up faster than the longer term ones, and you're just going to get better selling opportunities. Oh, there's a lot to unpack. Like these two questions back to back, there's such a lot to unpack there. Oh my goodness.
Dan's getting excited. I can hear it in his voice, listeners.
I know, man.
You're waking him up there in the other options mecca. You're going to battle Frankfurt versus Frankfurt. There can be only one, Dan. But great question. I'll have to start working some put examples into our examples too, just so people can see what we're talking about. You could use them on both sides. It's just the end of the day. Would you agree, Dan, calls are more intuitive for people to grasp?
Yeah, absolutely. Absolutely.
All right, let's keep on going. Let's go out to our live chat. One of our pro members, Option God, has a question for us, Dan. He wants to know, what do Mark and Dan have on in their trading accounts right now? He has it all in caps, right now. Inquiring minds want to know. Dan, he wants to know right now.
Right now.
What you got? Well, I'll start off while Dan goes and fires up his accounts. Mine are pretty easy because I'm heading out tomorrow after the bell. Obviously, the markets are closed on Friday and no shows on Friday. So I'll be heading out for a spring break kind of vacation. I'll be cracking the microphone, turning it off after TWIFO tomorrow, and then heading out on a plane. So I don't have a ton on right now because I will be traveling. Good pro tip, if you're away from your screens, away from your things, it's probably best not to have a ton of stuff on. So right now, pretty much the only thing I have on right now are a bunch of puts, Dan, in VIX that we got talked into by our audience on VolViews on Friday, Andrew and I. And we bought them on Options Oddities. We worked some orders because a big trade went up that day. So I bought a bunch of the April 13 puts legged in for prices around 21 cents. So that's what we got. And they're looking pretty good right now. Obviously, vol is coming off a little bit, but that's pretty much all I got. I threw in a fly right before the show just for fun. I continue to tilt at the windmill of one-day UVIX trading. I don't know why I do this, but it is kind of fun, and it provides some good fodder for the show. So I'm working a bit on some UVIX, pretty much at the money, 8.5 puts right now, listeners, expiring again, end of the day tomorrow. I'm not filled yet. I don't think I'm going to get filled. I was kind of aggressive with my bid, but that's pretty much all I have going on. And the puts I can obviously leave on in VIX for a while, so I don't need to babysit those. Mr. Dan, what you got? Option God wants to know. Inquiring Mind wants to know.
I mean, mainly what I have on is in my IRAs, covered calls, a little bit of cash secured put action. That's mainly it. I've got on some other trade that's going against me in my trading account, so I don't even want to talk about that one. But yeah, I mean, mainly it's just my investing side for right now, covered calls and cash secured puts.
Yeah, I didn't even get into the long-term IRA side. I don't count that. That's not the fun slinging stuff. Dan, you can tell us all. It's a safe space. You're long Shiba. We know it. We understand.
Exactly right. Yeah, I did an option trade in it against some counterparty that may or may not be there if ever I want to exercise.
An option trade on a 0.00029 cent underlying. Yes.
Yeah, that's a strike.
That's
right.
a good one. That's a good one. All right, let's get one more here because we're going to be gone next week. Give the folks a little bit of love. Let's go international, Dan. How about that?
Yeah.
Let's go out. We don't get a lot coming in from Facebook. Seems like a lot of our international listeners like to hang out on Facebook. We don't get a lot of questions coming in from there. Most of them come in via the usual routes, the other social media platforms. Questions at the Option Insider, obviously, as just did from our pro chat there. But we got Sultan Hussein. Interesting name coming in from Facebook. He says, hi, I'm looking for some advice if that's okay. Well, yeah, it's okay. Is trading options more riskier than trading CFDs, aka contracts for difference, listeners? Is it worth it? Well, that's probably the name, also some of the English, and the fact that he's asking about CFDs all kind of sum up to the fact that you're probably writing from overseas, I'm guessing here, Sultan. In which case, the other guess is, of course, that CFDs are not really approved for trading here in the U.S. You may not be familiar with these, listeners. These are contracts for difference. These have sprung up in a lot of markets overseas where there isn't really a deep and liquid options market you can turn to, like here in the U.S. We don't really have a lot of use case for these here in the U.S., Sultan Hussein, because we have deep, liquid, listed options market on just about everything you want to trade. So it could be equities, could be stocks. Listen to our TWIFO show. There's options on, nat gas, gold, whatever the heck you want to sling. There's a pretty deep and listed options market with counterparty clearing there, so you have no counterparty risk. There are a lot of nice elements to these markets that we have here that we kind of take for granted, quite frankly, here in the U.S. We don't really need CFDs. Dan, if you have any thoughts on CFDs, and B, he's kind of given me food for thought for an episode. Maybe we do a whole episode on options alternatives, warrants, CFDs, these things that have sprung up in other markets. Dan, what do you think?
Could be an interesting episode. I mean, I don't know that I've ever traded a CFD, to tell you the truth. So I
have not either. We can kind of just compare and contrast what they bring to the table and more often what they don't.
Yeah. I mean, as far as an episode goes, that could be kind of fun. I'd probably have to bone up on a couple of these things, though. I mean, warrants, you just end up with warrants from long-term stock investments time to time in your life. I mean, it's basically just like a call anyway, right? But yeah, I mean, I don't know, Sultan, I don't really have too much to add to this because I don't have too much experience with it.
Yeah, interesting question. Again, mostly for our international listeners because you can't trade these. They're considered OTC effectively here in the U.S., so they're banned for most U.S. listeners, which is the lion's share of our audience. But we love our international listeners. It's not all about Kentucky. We love Kentucky, too. But it might be fun to explore some of these things because we do get these questions every now and then from people who are in other markets who don't have access to the same depth of options liquidity that we take for granted here in the U.S. So it might be worthwhile maybe dispelling some myths and some misconceptions about some of these other options alternatives, shall we call them charitably out there. All right, Mr. Dan, that music means we come to the end now on episode 2. Man, time flies when we're having fun. Can you believe 2 episodes in the can already, sir, in our doubleheader?
No, man, I can't. You're right. Like this really did go fast. That's crazy stuff, man. So yeah.
I'm going to be traveling next week. What are you going to do during this time with all your free time now? How are you going to celebrate? Or maybe you're going to weep and drink heavily.
You know what? I always give up drinking for Lent, so it's my birthday next Wednesday, so maybe I will just get good and hammered. No.
There you go. What better way to celebrate Education Wednesday by getting good and hammered?
Right. I'm proud.
He'll be sitting by his microphone weeping, listeners, waiting for the week after when he could talk to us again here on the show. While you're doing that, Dan, and while you're recovering from your blackout drunk, where should folks go if they want to reach out to you, sir?
All right. Wait, does this one go out live too, but it gets released next week?
It's going out to our pro right now. We'll go out to our pro members later today, to the rest of the network next week.
Okay. So pro members, if you have questions, if you're thinking about meeting me up in person in Sonoma in June, go to the AMA that we're having, the Ask Me Anything, about our Smart Trade Summit. And just go to markettaker.com/AMA. And I'm going to hold that live this Saturday. For anybody who's listening to this after, if you're not a pro member, you can, if you're interested in joining us in Sonoma, still hit me up. You can just email me, dan@marktaker.com, and I would be just thrilled to tell you all about it and send you a special invitation.
Yeah. Check out that VIP package that Dan's given me, the full tour, soup to nuts, daily masseuse. I mean, Dan, you don't have to go that far from me, but you did, and I appreciate that. In the meantime, listeners, you folks can learn more. Markettaker.com. Don't forget the second T for Theta. That's going to do it for us on the network today. As you're listening to this next week, we'll have our usual array of content. We also have coming up tomorrow, almost a week in the past for you folks on the on-demand side. We will be coming back with, of course, the option block tomorrow, as well as This Week in Futures options. And the markets will be closed for the Good Friday holiday, so no vol views, no options oddities. We'll make sure you get some snippets on the on-demand side for you folks, so you're not kept waiting for us for too much. I will be traveling next week, so no OB and crypto on Monday as well. Again, you'll get some content on the on-demand side. Don't you fret. And then next week, you will get this episode in your ear holes. And then we'll be back live again in 2 weeks. Another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.